Hey, good afternoon, everybody. It's January 9th, 2026. We're starting off the new year in a very interesting way. President Trump made an announcement yesterday that his partners are going to be purchasing $200 billion worth of mortgage backed securities in the months ahead. What does that actually mean? Well, a lot of people have been watching what the federal funds rate has been doing. It's been coming down, but interest rates haven't really been moving that much, right? You've probably seen it. And that's inflationary reasons, it's all sorts of things. But for the Fed to be involved in mortgage backed securities directly is considered quantitative easing. And that becomes an issue with bond traders because that's also an inflationary move. This one's different. That's why I'm bringing this to your attention. These partners that President Trump mentioned are Freddie and Fannie. Freddie and Fannie have been flush with cash for a very long time, but they hold a lot of those holdings in cash in treasuries, which are short term investments. They, by making a balance sheet move of transferring some of those treasury holdings into mortgage backed security holdings, they're literally directly going to be affecting what interest rates are doing. That infusion of liquidity or cash into that market basically brings up the demand in a supply and demand market that's usually pretty balanced. So if you drive up demand and supply stays pretty neutral, what's going to happen is those price the bonds are actually going to get higher, which to rates is an inverse relationship. So interest rates will be coming down because of it. That's fantastic news. The plan is $200 billion over the next roughly 10 months. So it's about 20 billion a month. And we'll see what happens from there. But that's a massive, massive infusion. Now, how does that affect you today? Here's the funny part. The markets react just with the announcement. It actually hasn't started yet, but just on the announcement alone, we've seen a move of somewhere between 60 and 70 basis points. That's huge. If you're a client looking to purchase, if you're a client looking at a refinance, it's a very good time to lock in potentially. Even if we think things are going to maybe improve in the future, the swing we got just from the announcement was huge. So we'll have to see in the weeks ahead what actually happens, or actually, for that matter, in the months ahead, what's going to happen. But why miss out on that opportunity, right? If you're a refinance client, you can start the process, get a loan lock, be protected. And hey, if 20 days in the process rates are improving, oftentimes a lender will have what's called a float down policy. They'll reduce the rate slightly in order to help you participate in the improvements the market has actually gotten. If you're in a purchase transaction, you're kind of at the whim of the timeline of a transaction, right? You can't say, hey, Mr. Seller, I want to wait to close because I need to float my rate down. I need to change lenders, whatever it's going to be. It doesn't work. But hey, if you're lucky enough to dive in and get a contract accepted right now, you are going to be very happy with the results. If I can be of any assistance to you in looking at rates and looking at what your situation may enable you to do, I'd be more than happy to do so. So, hey, send me a quick DM and I'd love to go through that with you very personally. All right. Have a great day.